Hello, hello, and welcome back to zinstake, your new favorite financial news podcast. Okay, starting with this week, big crypto news. So I know a lot of people have been very excited to find out more about what's going on with crypto. Well, I'm sorry to say the news isn't very good on that. All right, so today is Saturday, July 6th, 2024. Also, I want to start with a disclaimer before we get into the news. I want everyone to know this isn't financial advice. Please contact a licensed financial advisor for actual advice. This is just for your entertainment. And also, if you ever hear anything on this podcast that you don't like, just turn it off. You know, it's not for everyone. I understand that. And emotions can run high. Anyway, moving on. CNBC reports um, a news article titled Over $170 billion Wiped Off Cryptocurrencies as Market Tanks on Mt. Gov Bitcoin Payout Fears. Bitcoin price fell under 55,000 USD for the first time since February. Crypto market shed $170 billion on Friday in 24 hours. On Friday, the trustee for Mt. Gox, it's mt.gox, bankruptcy estate, said it had begun making repayments in Bitcoin and Bitcoin Cash to some of its creditors, nearly 9 billion to users of Mt. Gov. Docs. Anyway, so a lot of people who are in cryptocurrencies will have noticed that their valuations have gone down really significantly lately, and it's not fun. It's not fun. If you ask people though, here's my question. As the prices of crypto continue to sink because of this bankruptcy here, does that mean you no longer believe in crypto? Because I'll tell you this, there's times in my life where I gave up on the old crypto. I said, crypto's done. It's old news, I said. And now look at it. Comes back, it goes down for a year or two here and there, and it comes back every couple of years. Happens all the time. And something I've learned is that we here in the West take cryptocurrency quite for granted, right? If you live in some African country, uh, a dictatorship, some warlord nation, your currency's not as stable as the ones in the West. And not only is it not as stable, I mean, you don't have fears in this country of the government coming here and taking your currency. You don't have fears that a Zimbabwe effect is going to happen to you, where overnight prices will literally double and your currency will lose half its value. You don't have these types of fears, right? But as the world continues to grow and get larger, and people in foreign third world countries have more and more money, they're going to want to more and more stable currencies. And right now, Western currencies are not looking that hot right now. So I can see how over the years, crypto might end up popping off. Now, this is where it gets down to the nitty gritty, right? Do you believe in crypto, right? So if you believe in crypto, if you believe that no matter what, crypto will get adopted, no matter what, crypto will become something big, really, sometime in the future, just like gold or something, then you would see something like this as a huge buying opportunity, right? Prices are the cheapest they've been in a long, long time. And let's just remember that not too long ago, in the last few bull runs for crypto, a lot of people were upset that they weren't able to get crypto while it was low. Well, now is your chance, right? Now is the time that you have to get into it. Again, if you believe in it, it's not for everyone. A lot of old timers don't want to believe in it, don't get it, don't want to get it. I understand. Me personally, I've changed my tune on it and I'm slowly getting back into it. And I think that these valuations are really great, and you want to start buying low while you can with with the hot cryptos that you like. Moving on to the next bit here, also from CNBC. This is from Monday, July 1st. Is the U.S. stock market too concentrated? Okay, here we go. So the top 10 largest U.S. companies accounted for 14% of the S&P 500 index a decade ago. Today, they account for more than a third. Tech euphoria has helped drive up the Mag 7 stocks. As a reminder, that's Apple, Amazon, Alphabet, that's Google, Meta, Microsoft, Nvidia, and Tesla. Some experts fear such concentration may put investors at risk. Others think it's not a big deal. Well, it is risky, right? If imagine you personally, right? You used to have, I don't know, 100 different stocks, 50 different stocks, financial instruments, whatever. A third of them go down, one third of them stays about the same, one third goes up. It's okay, not the end of the world. But if you have literally all of your money invested in a few key stocks and something like Nvidia goes down or Microsoft has something happen to it, you could very well get shafted. You don't want that. You're going to end up on the wrong side of the coin, my friends. And this is just a symptom of the greater issue, right? So as we are facing more and more recession fears, people are looking for that new shiny object, that place to put all their money in. They just want to be on the ride that everyone else is into. Notice that your average person buys high and sells low. That's just real life. Okay, so most people, they see something going up, they see it on the news, they start hearing about it, and then they get jealous that their brother-in-law or their sister or someone ended up making a bunch of money on it, and they want to get into it before it's too late, right? That's that FOMO, that fear of missing out. Now, because evaluations are really crazy, I personally would never touch these kind of stocks, right? If you look at their um, PE ratios, right? So the profit to earnings, these companies are worth 80, 60, 70 times what they earn in a year. It's not a good sign. It's not a good sign, right? Could they continue to pop off forever and ever? Yeah, okay, in theory, maybe. But what happens when we have some real issues like supply shortages and everything else that's going to be coming around the corner, especially with elections? You know, do I really think that these stocks will continue to go higher and higher and higher? No. And if the entire stock market is is posted on these 10 stocks, right? A third of all the money, that says something. So what happens so obviously it's a bubble, right? So what happens when this bubble bursts? Isn't this not similar to what happened in the 90s during the dot-com bubble? And more to the point, aren't these some of the same names? Microsoft? Like, come on. I think it's just silly. I think tech is way overhyped and overpriced. And that's another thing is people like to forget that you need minerals and materials for computers, for wires. You need copper for wires. You need silver, copper, all sorts of things to go in these fancy computers and data centers and everything else. And they want more and more of it for their AI fantasies, right? But they don't want more minerals. If you look at the S&P 500 ratio to the TSX Venture Exchange, for example, it's 0.2, it's 0.02 to 1. That's as close to zero as you're going to get. At some point, there's going to be a blow off the top. Something's going to happen. Something's going to pop. And once this bubble pops, then people are going to realize that mineral prices are super expensive. Right here at zinstake, we believe in the commodity super cycle. You're starting to see it now. Silver is really high. Copper is getting high, right? Everything's going higher and higher and higher. And eventually, they're going to realize that the prices are too high and the money's going to shift slowly, maybe not even slowly. It could happen all at once, right? It could be a big burst. Tech's going to burst at some point for sure. And then afterwards, money's going to start trickling in to minerals. It's just what's going to happen. But, here at Dinstake, we have been wrong, especially about interest rates in the past. Going forward, though, we will keep you posted on what happens with these kinds of things. Moving forward, though, for now, we will look at everyone's favorite commodity, oil. And this is from Bloomberg, BNN Bloomberg, so that's Canadian Bloomberg, over on Wednesday. Oil near 2-month high as equities soar and U.S. stockpiles draw. Oil trades near a 2-month high. Brent traded around 87 USD and WTI at 83 USD per barrel. Also, we had the biggest drop in US stockpiles in almost a year. That was minus 12 million if you check the inventories, signaling tightening supplies. There are signs of softer demand, have tempered some of the recent optimism, and have led Saudi Aramco to slash prices in crude to Asia. So there's been softening of demand in Asia because Asia is dealing with their own inflation crisis. Now, also, we have Hurricane Beryl, which got degraded from category 5 to category 2. It's made landfall in Mexico. It's not projected to hit the Mexican offshore drilling, but it could very well hit all that's the Texas stuff, right? So all the US stuff, just a little bit north. And more to the point, people are afraid that if you see something like this early in hurricane season, because of climate change and everything else, what's going to happen a month or two down the line when hurricane season really picks off, right? And then there's a lot of drilling that happens in that little area and again, there's tightening of supply with the stockpiles drawing. That could be anything. It could be, for all we know, it could very well just be oil companies buying back their barrels. There's a big election going on. There could be any number of things. A lot of people are afraid. A lot of companies might be buying up these barrels in case a war somewhere around the world pops off. You never know. Moving on to everyone's favorite metal. Copper. So I got this from mining.com. Copper price surpasses $10,000 per ton, expected to rise further, says Citigroup. Right. So the first point I have here is copper did surpass over $10,000 a ton, and it's projected to continue to go higher and higher. World's biggest consumer, China, anticipated to introduce further stimulus, and copper is needed for global energy transition, if you believe in that. So, a couple points on that. Number one, everything that is computerized, electronic, conducts electricity pretty much has copper in it. Yes, we do have two other conductors, that's silver and gold. Good luck trying to find gold wires, right? Um, Almost everything that it has electricity running through it in some way or another, just about everything pretty much has copper. And this is exactly what we were talking about a few minutes ago. People love the idea of technology, and you do too. Your fancy car's got new fancy components in it. It can tell you stock prices. It can tell you the weather. It can do all sorts of fancy things. Some of these cars drive themselves, and they're all heavier than they used to be. And if you don't believe me, take a look at the state of your roads. You live in North America, you've seen it. Your roads are a lot worse than they used to be, and there's a lot more construction needed to maintain those roads than used to be. And let's not forget, electric cars are like almost twice as heavy as a regular car, and regular cars are heavier. It just goes on and on, right? And more to the point, all cars today all use more copper and silver than they used to like 10 years ago. Very simple, right? So and more to the point, everyone loves to get the new iPhone, the new Android, new something. Everyone wants new phones. Everyone wants new computers every 2 or 3 years. It always happens. And there's more and more people. So there's that region between Istanbul to Jakarta with that 1.5 billion people whose GDP is supposed to rise 20% within the next couple years, and they're all getting more technology, and their economies are finally advancing, which means that they can finally afford things, just like you can. Computers, phones, cars, and the more of it, the more copper you need. And there is massive underinvestment into copper and metals and everything else right now. You're seeing it, I'm seeing it, we're all seeing it. Um, that's it for copper for now, but we will keep an eye on copper. I personally really believe in the copper crisis. There was a shortage of copper about a month ago, and we're still short copper. Yes, they figured out some things here and there, but there is not enough copper in the world for any energy transition. Whether or not you believe in it is not the point. The point of the matter is there just ain't enough copper, and there ain't enough copper mines. We're just not doing it, right? So this is where the whole super cycle theory comes into play, right? So you're seeing it right now. Things like copper and other metals are soaring prices right now. And then eventually that money that's, all into tech right now is going to have to slowly shift over to mining and metals. Right now copper prices and stuff are going up really high. And then pretty soon some mining explorer somewhere is going to find a huge copper reserve, make a bunch of money. People are going to see that prices for those mining companies or exploration companies are going to pop off. People are going to get excited. They're going to realize that they're not making as much money in tech, and then hedge funds are going to shift, and then slowly you're going to start seeing a big shift happening, right? Moving on, everyone's favorite energy source, uranium. Okay, so I get a lot of emails about when are we doing more uranium? How come we don't have enough uranium? Well, this is for you. From investing.com, is uranium back? All right, who's back? All right. So some notes here. Analysts at Alpine Macro and PCA Research are bullish on uranium, with Alpine calling a super cycle bull market for uranium. Super cycle. Firm cites global shift back towards nuclear energy. Alpine says uranium supply is struggling to keep pace with resurgent demand following years of underinvestment and mine closures. China to add 150 new reactors by 2040, reactor life extensions, restarts of idled facilities, and potential small modular reactors, right? So basically, not only do you have China adding another 150 new reactors by 2040, so that's like less than 20 years from now, and it takes about what 3 to 5 years to build one, so they got lots planned. They got lots planned. And on top of that, you have people all over the world, Japan especially, restarting idled facilities. Some people in Europe are doing that. I'm not going to mention any names with Europe, right? Europe has really let people down in the uranium market. But more to the point, just because Europe and North America won't build new reactors, that doesn't mean the rest of the world won't. They really don't care. They will continue to build new reactors in all these countries that you never think about. And as they start doing it and their quality of life increases, people have more and more money over there in order to buy things that they really want to buy, which they're going to run into this underinvestment problem we're talking about constantly. One more note here, there's a shift in public sentiment. So if you are green, please cover your ears. If you are afraid of uranium in some way, nuclear energy in any way, please, please, please close your ears. Uranium is the future. Nuclear energy is the future. Okay? There will come a day, maybe not today or tomorrow, but definitely within the next 30 to 50 years, that uranium will be the main energy source. And it doesn't matter if you don't believe in it. It doesn't matter if your whole country doesn't believe in it, right? The UK doesn't need to have uranium energy if they don't want to. They can shut it all off. Germany, whatever you want, any country, right? There's going to be someone else, some other country, your India, your Japan, your Chinas of the world, who will do that. And once their energy capacity surpasses yours, they'll be able to do things you can't do, which means that you don't have a choice. It's either get on the train or get left behind. So now we move on to gold's little brother, silver. CNBC, silver set for a terrific year and could outperform gold to hit a 10-year high. Global silver demand is forecasted to reach $1.2 billion in ounces, or no, sorry, 1.2 billion ounces in 2024. We think silver will have a terrific year, especially in terms of demand, the executive director of the Silver Institute says. So, a lot of people are saying it's going to outperform gold. So, this is what we were talking about earlier, right? There is a difference between silver and gold. Forget the price for a second. There are other differences. They do both conduct, but the difference is because silver is cheaper, it is much, much, much more likely to be used in fancy things. Some things copper just isn't good enough for, right? For some computer fancy things, you're going to need silver. And we use more and more silver every single day. Silver is an industrial metal. Gold is a very rarely used in industrial metals, right? Gold is more of a, people like to think of it as a currency. We see it as a currency, right? Gold is not fiat currency. That's what gold is. Gold is not paper dollars, right? Silver, we don't see it that way. Silver is something you actually use, right? For a long, long time, we used silver for many, many years for everything from camera film and you name it, everything else. Now it's gone by the wayside, but we're starting to realize, like we're talking about this underinvestment, right? Like we just talked about the TSXV being at like historic lows, people. It's wild. If you are looking to get into the commodity super cycle, I'm telling you right now, you go into the TSX Venture Exchange. That's where all the hot ones are at. You do a little bit of research. I'm not going to sit here and tell you what you should or shouldn't invest in, okay? But if you want to be a part of that commodity super cycle, which a lot of people are saying is that generational wealth building potential that they're looking for. Right now, it's insanely cheap. You want something, it's that old adage, right? Buy low, sell high. It's low. And the question is, do you believe that commodities will super cycle? Because some things you can't argue with, right? You can't argue with the fact that metals and mining are deeply deeply underinvested in. You can't argue with the fact that there are shortages all over the place and we don't have nearly enough metals. And that's a recipe for a disaster. The only question is, how long will it take people to recognize that and see that before they start investing in these mining exploration, mining companies? Yeah, so how it's going to work for those people who are wondering, first it's going to go into your big companies, right? Your Barrick Gold, your Glencore, stuff like that. And then it's going to trickle into your smaller exploration companies. What's going to happen is some explorer somewhere, and I'm telling you, it's going to happen. Some tiny explorer, some 5 million, 50 million, market cap company is going to discover something huge during a shortage and they're going to sell it and they're going to go up 20, 50, 100 times. You don't know. And when that happens, there's going to be a lot of commodity guys, a lot of mine, because I know, I watch, I read, I listen. Okay. There are a lot of you mining company interested people who sit there for years looking at your junior miners, looking, like just reading, doing your research, trying to find the right one. And one day you're going to be right. And when that happens, oh boy, will you talk smoke. Years and years of you being told you're wrong, years and years of your friends showing you you're wrong. Look at this. I invested in Tesla. You make no money. I do. It's it's gonna hit. It's gonna hit. And when that hits, oh boy, will you talk smoke. And it's gonna be all over the news. Right now, this is page 16, page 20 stuff on the news, right? Pretty soon it's gonna be page one. And when it gets to page one, these type of things are gonna pop up. You're seeing it happen with uranium right now, right? You're starting to see uranium companies, Cameco, one of the biggest companies, well, pretty much the biggest Western company for uranium, has doubled within the last year for prices. It's nothing but sky high. And it's just going to keep going up. And as the metals get more and more money, the mining companies get more and more money, you're going to start seeing that super cycles come in. Okay. But enough about that. Let's talk a little bit about everyone's favorite not currency, gold. Well, not dollar currency, not fiat currency, not paper currency, right? Gold from Bloomberg. India boosts gold reserves by most in 2 years, World Gold Council says. India added more than 9 tons in June, the council says. Central bank buying has underpinned gold's rally this year. So you will notice a lot of the BRICS countries, India especially, right? India is the big headliner, but everybody, Argentina, Brazil, everybody, China, everybody. So the way they do it is you've been seeing this, right? Everyone sees this. There's less and less treasuries being bought, less and less US dollars being bought in these central bank reserves. What they're doing is they're buying more and more gold because they believe that, why be in dollar? Like people don't want to be cut off from the Western banking system, right? Especially after what happened with Russia. We're not going to try to get too political with this, but after that big Russia event, after what happened to people like Venezuela and Iran, you're thinking to yourself, let's say you're a dictator in some country that'll remain unnamed, and you're sitting there quivering in your boots because you think the US might shut you down. The UK, Europe, somebody might shut you down, teach you a lesson, right? Just like they did with Russia. Maybe you don't want to be taught a lesson. Maybe, call me crazy here, okay? But maybe you personally don't want to be taught a lesson. But at the same time, you don't want to make a big scene, right? You can't get rid of all your treasuries and your US dollars all at once. You don't want to be noticed. So what do? You let your treasuries expire, and when that expires, instead of buying new treasuries, you buy gold for your reserves because the Shanghai market, they take gold. So it's real easy to buy, oil, whatever you need, minerals, you name it, with gold as a reserve. Every market in the world takes gold. So you can have gold, switch it into whatever market currency you need, whether that's dollars, euros, yuan, whatever it happens to be. Buy what you need and then move on, right? So and also the more these central banks buy up gold, the higher these prices will go, especially because of these. So we here at zinstake, we talked about how we thought that there's no way these G7 countries would actually lower interest rates. We used to believe that they had the gall, the stones, whatever you call it, right? The bravery, the courage, the Paul Volcker of it all, to be able to, at the very minimum, have somewhat higher, 5% interest rates, right? Not going to happen. They're lowering it. ECB lowered it in June. Canada recently lowered it. Where the U.S. is projected to lower it. Everyone's lowering it. Everyone's talking about lowering it. It's happening. Inflation, their CPI inflation number is still 3%, depending on where you're talking about. Right? It's not good. Inflation is not at this key 2%. And forget about all the inflation you already ate up. Forget about that. Right? Going forward, inflation hasn't even gone down yet. So they're too afraid of their equity markets breaking down and collapsing. They would rather lower the interest rates to keep everyone happy, which means you will continue to have inflation. And if you continue to have inflation, what's going to go up? Gold, right? That's why you have people like India, doubling their gold reserves. It's wild. Speaking of interest rates, from Reuters, Canada becomes first G7 nation to cut interest rates. Bank of Canada says more rates cuts to be gradual. Rate cuts to happen if inflation continues to ease. Economists predicted the BOC would cut again in July. US inflation is stickier, and markets expect the Federal Reserve will cut only once this year. So, there's always rate cuts in the future. Everyone thinks there's going to be rate cuts. Everyone wants rate cuts. Now, the US has a harder time cutting rates because the US dollar is used for something like 60% of all global transactions for things in the whole world. So the US dollar needs to remain somewhat stable, right? So they'll probably be the last of the G7 countries to cut rates, but you're seeing it all the time. There's, I think, in the ECB, in the ECB, they cut in June 16th, 6th, I think it was, right? So for the next quote unquote rate cut, I was reading about it, there's 26 members that make this decision. Only one of them opposed it. Surprise, surprise, the Austrian, right? For you Austrian economists out there, weird how that works. But yes, they're all desperate to cut rates. Desperate. And I'm really sorry to my fans and listeners. I know we believed. We wanted to believe, right? We wanted these people to show everyone and us we were wrong. That you were like Paul Volcker, that you could get double digits interest rates, that you could beat back inflation, that you could give us a better life for all, but they don't care, right? There's too many. This is something that you got to think about. The median voter in most, if not all, Western or G7 countries is past the age of 50, right? Like what the average person in Canada is 55. What's the average person in the US? Probably around the same age. The average person in Japan, probably older. Europe, same thing. Almost all of them are asset holders. It's always older people that own homes, guys. It's always older people that saved up their whole lives to have high asset prices. So here's how it goes, right? So you're 20 in the year 1980 or 1990, whatever it happens to be. You save up your money. Assets are cheap. You buy up assets. And then over the next 20 years from 2004 to 2024, asset prices just go up astronomical. You're making a killing, right? Does it really matter that egg prices are $6 a crate or a cart or whatever you call them, you know, when your house went from 500,000 to 2 million, or your stock portfolio has gone up from, say, I don't know, 20 or 30,000 to 200, 300,000. You're living it up. You don't care. Why would you care? And you're the people that vote. The average person that votes is older, guys. Young people, you know, they're disenfranchised from voting because they just don't believe in it. Because not only are they such a small voting block compared to the older people, either they don't know enough, either they haven't been around long enough, or they're just disenfranchised by it. They see it. It doesn't work for them. You look at these options that they have. Nobody is there saying that we need to reduce housing prices. Nobody is there saying that we need to reduce asset prices so young people can have no, nobody's saying that. Everyone is saying, let's cut these 5%, okay, which is basically normalized interest rates. Let's cut what should be normal interest rates even lower so that I can have a third mortgage, so I can increase my housing prices, so I can live it up. That's the dream. So, moving on from something negative like interest rates and asset prices, let's move on to something positive. Houthis and the Red Sea crisis. Okay, not that positive, but not as depressing for most people. So, you know, let's have a look here. Houthi explosive drone boat. This is from Reuters. So, the Houthi explosive drone boat attack escalates Red Sea danger. Houthis are sending drone boats packed with explosive into the Red Sea. Houthis first launch aerial drone and missile strikes and have to date 70 attacks. They've sunk two vessels, seized one, and killed at least three. War risk insurance premiums could rise, and Chinese vessels avoid higher premiums. First of all, it's funny that the Houthis leave the Chinese alone, right? To the point where they don't have to pay higher insurance premiums to go through the Red Sea. But more to the point, you're not seeing very many people go to the Red Sea, right? If you are a medium-sized business, you don't want to go through the Red Sea. Most shipping companies do not want to go to the Red Sea. Most shipping companies want to go around. That's an extra 2 weeks, and it's more costly, more fuel, more everything. And where does that go to? You, the consumer. This right here is inflationary. So not only do you have monetary inflation, because the government loves to not only print dollars, overspend, and lower interest rates so that you can overbuy things that you can't afford, they also love to cause problems with the Houthis and everyone else in that region. And now the Houthis just went ahead and shut down the Red Sea. It's not completely shut down, but Egypt's economy would tell you something different, right? They're not like if you look at the traffic going from the through the Red Sea before this Houthi issue, then after, it's like a quarter of what it used to be. It's nowhere near. People are deadly afraid. Nobody's parents want to see their son, who's a sailor, on the news. Nobody wants their wife to have to pick them up in a body bag. Nobody wants, their cousin or their sister waiting by a telephone, worried because she lost contact with you in the Red Sea. This isn't something people want. And this Houthi thing, it ain't stopping. It's been going on since before this podcast started. Houthis, Houthis, Houthis. Just a riot, these guys, eh? So, last article for the day. Uranium market surge. This is by News AI. Warren Buffett and Bill Gates team up to transform nuclear power as uranium market points to higher prices. Bill Gates' nuclear energy startup, Terra Power, and Warren Buffett are co-sponsoring a $4 billion nuclear facility in Wyoming, aiming to transform nuclear power through modular reactors. The uranium market is expected to see significant price increases due to tight supplies and rising demand from the nuclear sector. Major investments in uranium mining stocks are already showing impressive returns. Terra Power remains private, but uranium stocks like Bedford Metals are showing significant growth potential. Investing in uranium can yield high returns. That's what these people are saying, and it will continue to pop off. Um, and as we go towards the future, you have big guys like Warren Buffett and Bill Gates looking at this and saying, enough is enough, right? You need to build more reactors. And they will. Someone will. And someone will take advantage of the uranium boom. And let's just hope it's you. Well, that's it for today, folks. I'm really grateful that you listened to this beautiful podcast. We're really excited to have you listen to us. We're really grateful for your positive support. And if you do like what you hear, it's okay. Like, share, subscribe. Don't you not be shy. People like to hear this stuff. And if you want to leave us a comment, or if you feel that there's some article, some issue, something out there that you want to hear more about, then give us an email, send it to us. We're at zinstake, that's zinstake at gmail.com. That's zinstake at gmail.com, just like the podcast. Send us an email. We'll read it, I promise. And we will get back to you probably, depending on how many people we have. But more to the point, if you show us something that you deem important, that you want on this podcast, chances are, if it is important, we'll put it on here, right? So thanks so much for listening. Thank you for all your support out there. And Jalal, we're thinking about you, buddy. Anyway, have a great day, folks.